Hi there guys, this is Chris Coney speaking and welcome back. Now in this lesson, we're going to learn to read the most fundamental part of a price chart, the candlestick. So first of all, make sure your chart is in candlestick mode by clicking on this tool that appears at the top toolbar. So you drop this down and you can select any one of these ways to display the price. We want specifically candles. So it's important to remember that no matter what we do in terms of chart settings or indicators, it's all just different ways of displaying the one piece of data we care about, the price. Right? The moment to moment changes in price is the one piece of data that everything else relies on. So chart settings are just different ways of displaying that data, starting with candlesticks. So let's zoom in to one candle and then we'll look at the different components. So each candle at a glance is displaying what happened to the price in that period of time. And you see on the top menu again, you have the ability to change the candles to display different time periods. So if we click this, right now it's set on to 1 hour, meaning every candle represents 1 hour worth of price movement. And then if we would change it to 4 hours, then that would mean that it's the same data, but combined 4 1-hour candles into a single 4-hour candle. Right? We'll deal with time frames in a separate lesson. I recommend that when you start trading, you start with daily candles. So let's go back to 1D on the top menu here. So now each candle is showing what happened to the price in a 24-hour period. And each candle represents a 24-hour period of trading. So from now on, we'll speak in terms of days. So let's zoom back in to one of the candles so we can break down the elements. Now they're called candles because that's kind of what they look like, right? In fact, we even call the thing like that long line the wick, and then the colored area the body. And each candle shows 4 pieces of information, or 4 prices. And these are known as the high, open, low, and close. Now the open is the price at the very start of the day. The high is the highest price that was reached during that day. The low is the lowest price that was ever reached during that day. And the close was the price at the end of the day, after which a new candle begins. So the wick displays the high and the low, and the body displays the open and the close. Now, if the price ended up higher at the close than when it opened, then the candle is displayed green to show that the price went up. And if the price ended up lower at the close than when it opened, then the candle is displayed red to show that the price fell. So on a green candle, the open price is at the bottom of the candle body, and on a red candle, the open price is at the top of the candle body. You'll also notice because the crypto markets never close, each candle begins exactly where the previous one left off. Right? Whatever price one candle closes at, the next candle will open at. So unlike the stock market, there are no price gaps, which is a very good thing. Now you don't have to use this crosshair and wave over specific points to find out what the open, high, low, or close price was. Coinigy will display this for you. All you have to do is just hover over any candle, and then the OHLC numbers are displayed at the top here. So candlesticks are the most fundamental tool that we use to display price data in a meaningful way. If I switch the chart just to display the price as a line, you can see immediately how someone who is using candlesticks already has an edge. So I'll switch back to candlesticks. Now, there are some traders who trade purely off candlestick patterns using this view that we've got right now with no overlays and no indicators. We've just looked at how price movements within a single day form a single candle. However, there is more insight to be extracted by looking at groups of candles and how they appear in specific combinations. So groups of candles often form specific and meaningful patterns, and all these patterns have funny names to help us remember what they are. So things like 3 white soldiers, dark cloud cover, shooting star pattern, and so on. There's dozens and dozens of them. So that's what I mean when I say some traders don't use any indicators at all. They just look at these candle patterns and then they make decisions purely off those as to which way the price is going to move next. Now, candlestick formations, the patterns is a module all on its own, and we will get to that in future lessons. So that's all for this lesson on how to read the basics of price using candlesticks. So until the next one, it's me, Chris Coney, saying bye for now.